Hey, gang, my name is Michael Lush, and I'm on with the real Jason Duncan, his podcast. And in this episode, we talk about the root of all success. What does it mean to be an entrepreneur in today's marketplace? What are the obstacles? How do we view that? What should our mindset be? And this was a great conversation. I've been very honored and privileged to be on Jason Duncan's podcast, the real Jason Duncan, not the fake ones out there. So if you also want to know the root of all success, please chime in, not only on this episode, but every episode subsequently, as these entrepreneurs collectively give you golden nuggets of how to achieve that success and what is the ultimate root of it. Take care. God bless.
Welcome to the root of all success with the real Jason Duncan, a podcast that explores how the world's most powerful entrepreneurs unlocked success and how their stories can help you do the same. A successful educator turned entrepreneur, Jason has built multi-million-dollar businesses that have been featured in Inc. magazine and Entrepreneur magazine. His life's mission now is helping entrepreneurs live what he calls #the exit lifestyle. Introducing TEDx speaker, mastermind leader, author, entrepreneur, cigar aficionado, motorcycle enthusiast, and host of The Root of All Success, the real Jason Duncan. The real Jason Duncan.
Welcome back to another episode of The Root of All Success. I am your boy, Jason Duncan, the real Jason Duncan. You can call me JD. I'm here today with Michael Lush on the show. And this guy is really interesting how I met him, and what he is going to be able to share with us today on the podcast is probably going to change your life forever, at least your financial life, because this stuff is what we all deal with. It's like, how do you get your mortgage paid off in as little as 5 to 7 years and without having to make any more money? But before I get into this information about Michael and do a full introduction of him, I want to let you know that how grateful I am that you watch and or listen to this show. If you're just listening to this on Spotify or iTunes, wherever you're listening to it, know that I've got a YouTube channel at youtube.com/TheRealJasonDuncan. And there's a playlist dedicated specifically to the root of all success that you can tag in there anytime and watch any of our shows that I've done. And this is episode number 207. So there's 206 more of these guys that you can go back and listen as I interview very successful entrepreneurs about how they became successful. And then more importantly, how you can use what they've learned to make yourself more successful. So let me tell you about today's guest. Michael Lush is the founder and CEO of Replace Your University. It's an education firm that specializes in real world tactical financial strategies that teach thousands of Americans how to get ahead and stay ahead. And he works with people like executive pastors, CEOs of major corporations, bank executives, mortgage executives, best-selling authors like yours truly. And most of all, a lot of blue-collar, wonderful American people right here around you and around me. So before he dedicated his full-time efforts to leading Replace Your University, he was a 17-year veteran of the mortgage industry. He was a loan officer, senior executive. And as he's going to tell in his story today, he had a really interesting run-in with a billionaire who kind of schooled him on this thing that he now says that a mortgage is financial crack to middle America. So are you addicted? You probably are. So he is the best-selling author of the book, Replace Your Mortgage, How to Pay Off Your Home in 5 to 7 years on your current income. And he's going to tell us all about that today. He's a dedicated family man. He's got 5 boys. Has a small farm here in the Middle Tennessee area, loves hanging out with them, teaching them about faith, family, finances, and freedom. You're going to learn all about Michael Lush, and I'll talk about how I met him in just a second. Let's welcome Michael to the show. Michael, good to see you, my man.
Thanks for having me.
Well, so I'm a member of the Standard Club in Nashville, and I was down there one night. This is several months ago, and got to talking with a guest of one of the other members, and your name came up because they know that I'm a business coach and I speak a lot about money and different things. And he said, "Do you know Michael Lush?" I'm like, "No, never heard of him." And he said, "Well, you really need to look into him." And he started giving me this pitch about how to use HELOCs, home equity lines of credit, to pay off your mortgage faster. And I said, "That's very interesting. I don't know anything about that." And so from that day forward, I've been trying to seek you out and find you. And so we finally got introduced And here we are. I was on your show. You've got a podcast. You talk about it a little bit, but now here we are talking about this in front of my audience. So I love the way stuff like that works. And we're right here in the Nashville area together too. So, so how's life been for 2023 for you, man?
It's been our best year yet. It always comes with a double-edged sword because, when you look at things, you're like, okay, best year yet. You should, look at that with joy. And some people may even look at it with complacency, but I kind of look at it like there was a lot left in the tank. So good year for us, best year we've ever had. 2024 is probably going to be even better. But still a lot left in the tank and a lot more that we can accomplish.
Well, by the time this airs, we'll already be a couple of weeks into 2024. So you have been doing Replace Your University, what we're going to be talking about today, for how long? When did you start this idea of teaching people how to use HELOCs?
Yeah, it was 2014. Really, I started doing it prior to 2014 because I was doing it myself 3 years prior to, or really 2.5 years prior to 2014. So I was telling friends, families, coworkers, and whatnot about this, but it wasn't a business. It didn't become a business until 2014. And it started off as Evict the Banks. And I still have a domain, evictthebanks.com, which I've just redirected to Replace University. And as we started, getting some affiliation with banks, they weren't too happy with that name. So like, okay, we need to come up with a different name. So we came up with Replace Your Mortgage, and it's still Replace Your Mortgage. It's just one subsidiary underneath Replace University. Replace University has Replace Your Mortgage, Replace Your Employer, Replace Your Banker, which is now being rebranded to Replace Your Retirement, which is an insurance agency. Replace Your Dollar, which gets into day trading, how to profitably and with reduced risk trade the markets. And then Replace Your Mindset, which is probably one of my favorites, believe it or not, which is more of I wouldn't really call it business coaching. It's more of a mindset coaching. Whether you're a business owner or if you're an entrepreneur, if you're, CPA or financial planner or anything, just somebody that you feel like you've kind of hit the mountaintop and now you've gotten complacent. We have a program that kind of pushes your limits, or what you think your limits are and what your limiting beliefs are, and pushes you further. So there's 5 subsidiaries underneath Replace University.
So 10 years, man. Congrats.
Mm-hmm.
Decade.
Thank you.
Decade. That's a feat that most people never, ever accomplish. And I don't think people like us who have businesses that are over 10 years old don't realize how big of a deal that is, because we don't, hey, right. I'm just doing what I do every day. How do you think you were able to make it for 10 years?
Yeah, I stumbled into my passion, which is weird because I was just talking to a college buddy of mine. He was a college teammate of mine. And, I'm helping him out with a couple things. And I was like, man, do you remember the name of our corporate finance professor in college? And he told me the name. And I remember the last name, but I didn't remember the first name. I was like, I wonder if he's still around. He's like, I don't know. I was like, he would be baffled that one of his worst students is now essentially doing this as a living. Because I had to take it twice. The first time around, flunked it miserably. But yeah, the second time around it ended up passing, but, I gave him some issues because I just didn't pay attention. And quite honestly, in college, I did just enough to stay eligible. High school was a little different, straight A student, but in college, it was, let's just do enough to stay eligible. And, so he would be amazed at what I now do for a living is, what he used to teach, which quite frankly, I'll be somewhat, transparent and honest about this. What I teach, I didn't learn in college. It kind of gave me the foundation from a mathematics standpoint and how to investigate stuff. But these things are not taught in college. So, I think he would be somewhat proud. And we've always heard the saying, your A students become great employees and your C students become good CEOs. So here I am. I was the C student at best.
It's like what they say, do you know what they call, do you know what you call the guy who graduates at the bottom of medical school? Doctor.
No. Oh, yeah, true. Yeah, that's a good point.
It doesn't matter, man. As long as you pass, it's all good.
How we lasted this long is it became a passion of mine. And, I have so many people that reach out to me and say, I'm thinking about starting a business or getting into business ownership and entrepreneurship. What is it do you think I should get into? Because they're looking for things that are high profit margin or path of least resistance. And I always give the same advice is, what are you passionate about? And whatever it is that you're passionate about, you will find yourself working away on it, and it won't feel like work. It's because it's fun. It's what your passion is. And I think that's a testament to how we have survived. It hasn't been all, sunshine and rainbows throughout those 10 years. We've had our ups and downs, and we've had our touch and go moments. Heck, I think it was 2019, 2020 that was really close to like, all right, I either need to figure out a buyer for this or give it up and do something else. But I was like, no, this is my passion. I really enjoy talking to people. I really enjoy helping people. I really enjoy impacting people. And it's the testimonials that I get back that really keep me invigorated and just push through. So perseverance and finding a passion. There were times that I was working on this until 3, 4 o'clock in the morning. Heck, I've had multiple occasions where I'm working on a project and I just tell my wife, I was like, I'm just going to work through the night. And, next thing you know, you look up, it's a couple of days and your body takes over. And it's like, okay, if you don't get some sleep, then bad things are going to happen. But, if it was something outside of this that I just looked at it from a profit margin standpoint, what it can only do for myself or my family, I wouldn't have worked that hard. And, if you want to succeed in life or in business, you just have to push through those barriers. And it's a lot easier when you're having fun doing it.
Well, we're going to get into, for the audience's sake, how to pay off your mortgage in 5 to 7 years without any additional income. So stay tuned. We're going to be getting to that. But I want first, because we're talking about with you, Michael, a business that you started on the heels of a corporate career. You've now been in business for a decade. If you had to boil down all of the success that you've been able to achieve in that decade to one key, like what is the one thing you would look at and go, this is what allowed me to be successful?
I didn't take no for an answer. Any setback I looked at as an opportunity. So, we had our trials and tribulations, as any business does, trying to grow, trying to scale, trying to reach more people. It comes with its obstacles, and every obstacle is an opportunity. So I don't, I've tried to, I don't go to a psychiatrist, but, it would be interesting to try to do a deep dive and some introspection of why I'm wired this way. But anything bad that happens, I look for the lesson in it, where a lot of people, unfortunately, most people look at obstacles and roadblocks as a sign, either from God or whatever, a sign from the marketplace that, okay, time to give up. I look at it as course correction. It's feedback. It's like, okay, this route didn't work, but there are other routes that I need to figure out that might work. So I think it's just really looking at it as feedback versus failure and trying to determine what is the best way to course correct and keep moving forward.
So how do you define the word success?
I would say the pursuit of happiness. It's not, there's this illusion out there that once you get to a certain level, then that's it. There's happiness. I don't think that's, depending on how you're wired, I don't think that's happiness. For me, I feel like I've got to constantly be pursuing something. I've had multiple conversations over the years of, 5, 10 years down the road, if you sell this thing and make bukus of money, what are you going to do? You're just going to sit back? And I honestly, if I were to answer that question, I think it would be tough for me to sit back and just relax for 6 months. Life would be different, no doubt. I wouldn't have to worry about money anymore. But would I sit back and do nothing and just toil away on the farm? No, I would find another project and another passion to pursue. So, it's just, I feel like happiness is the pursuit of it. And it's finding happiness inside of the journey of trying to accomplish whatever audacious goal that you have. That's where I'm most satisfied. Honestly, it gives me anxiety to feel like, okay, if I ever reach the mountaintop and let's say we sell the company or we partner up with venture capital firm, a bank, or whatever it is, it gives me anxiety because then it's like, okay, what do I do next? Where I'm most happy is in the pursuit of it.
So by that definition, the pursuit of happiness is success. Do you consider yourself to be successful?
Depends on the circles that you walk around. If I walk around with my old high school buddies or even sometimes my old college buddies, depending on how you look at success, if you look at it from a monetary standpoint, successful, depending on those circles. But I also have, other people that I lean on that I now call friends, mentors, consultants. And wow, they would feel broke. I've got one buddy, Ryan, probably worth 750 million. Like I mentioned, I had a mentor back in 2009 that is a billionaire. They wouldn't look at my monetary success as success. So it's all relative, right? Now there's multiple forms of success. It's, being well-rounded, not just from a financial standpoint, but are you fit? Do you have spiritual success? Are you grounded in your faith? Your relationships, are they successful? Your relationships, whether it's being married, your kids, or, other relatives, friends, and associates, are you successful in establishing relationships and building and maintaining those relationships? So, it depends on how you define success. It's broken up into all these different categories, but it's hard for me to get to the point where I feel like, all right, I've achieved ultimate success, because again, my passion goes back into the pursuit of it. So if I ever get there, then I just feel anxious that you're always chasing perfection. I don't think you've ever achieved it.
Yeah, I agree. I think for us as entrepreneurs, and I know that the listeners would agree with this too, is that you could set a goal. Let's say back in the day, your first goal was, I want to make 6 figures, man. I want to make 100 grand a year. Okay, you made 100 grand a year. What now? Oh, I want to make 200. I want to make 500. Okay, then you're like, well, I want to make 1 million. And so every time you set a goal and you achieve it, that doesn't mean you're done. You're always going to set that next one. So I think your definition that success is the ability to continue to pursue that happiness, I think that's really good. So with that now, let's kind of move into some tactics. So you're the guy that figured out kind of accidentally what the super wealthy knew, which is that mortgages are crack for middle America. They're not good for us. We're addicted to them. But you were in the mortgage business when you found this out, which led you to develop the big business you've been doing now for a decade and teaching people how to use this HELOC as a way to pay off your mortgage quicker. So tell us the story of how you figured it out. But I'm more concerned about the tactics, but I think it's interesting to know the story. But tell everybody that story, and then let's get into the tactics.
Let's take a quick break to thank our amazing sponsors for making this podcast possible.
As an entrepreneur, I know that you have to deal with sales on a regular basis. I mean, every entrepreneur does. And if you aren't paying attention to sales as an entrepreneur, you're not going to be an entrepreneur for very long. But I've got a sponsor of this show called Dub that helps you bring the personal back to sales. If you want to figure out how to improve content creation, improve client trust, improve your sales process, decrease the sales cycle, because we all know time kills deals. If you want to increase client bookings and increase conversions, you need to take a look at Dub. There's a special offer for Dub for listeners to The Root of All Success at therealjasonduncan.com/Dub. And that's DUBB. What Dub does, I've been using this for years. I'm a huge fan, and I'm so honored that they're our primary sponsor of the podcast. But they have helped over 60,000 businesses around the world communicate better, to make sales easier, to make sales more personal. And Dub is built for growing teams. I mean, you can set up video emails, you can set up custom onboarding, you can do admin reporting, anything you need around video and sales and automation. Dub is there. You can try Dub now. Your conversions to sales are waiting. All you got to do is go to therealjasonduncan.com/Dub. And there you're going to get 2 weeks for free to try Dub. Plus, you're going to get 50% off your first 2 months of Dub. You can't beat that. So go check it out. Go to therealjasonduncan.com/Dub.
Thanks for listening to our sponsors. Now, back to the show.
Yeah, and I also want to give credit where credit is due, because as I tell the story, you'll quickly realize that I'm not the guy that discovered this. This has been around for hundreds of years. It's actually what we used to do in this country prior to 1913. What I'm about to explain was very normal. And in fact, to this day, it's normal in a lot of other first world countries. Australia, this is very normal. They learn this in high school. We don't even learn this in college in the United States, but in Australia, they call it a money merge account. So they have the highest rate of second home ownership. And the reason being is, if you were able to pay your home off in 5 to 7 years, are you looking for a vacation home? Probably. Real estate's a good investment for the most part. So, that's kind of the next logical progression for Australians is they buy 2 homes. Now, the average Australian can pay off 2 homes in average of 14 years. That's what the data and stats support. However, the average American doesn't even pay off 1 home in 30 because we tend to chase interest rates, not rate of interest. So we're constantly refinancing either to pull out equity or chasing a lower rate to lower our payments. And we start the amortization schedule all over again. So the average American doesn't even pay off 1 home in 30 years, where the average Australian pays it off in 14 years. So I don't want to take credit for the strategy. It was just something that I dove into and was like, holy crap, you mean there's alternatives to financing real estate than the archaic, inefficient death pledge of a mortgage? Yeah. And it was a billionaire mentor of mine. He actually owns a hedge fund still to this day, owns a hedge fund or partner of a hedge fund. And was back then. So I was a senior executive for the 9th largest lender in the country prior to 2007. We were doing really well at my office in Charlotte, North Carolina. It was July of 2007. We were doing somewhere in the neighborhood of 500 to 600 units a month. And you fast forward 2 months. So you're not having to fast forward a whole lot. You go 2 months later, we were trying to scratch by just on 50 units. So we had plummeted 90% just because the subprime market completely dried up. And we were a company that we were a subprime company labeled as a subprime company because we could do what's called Alt-A document or Alt-A income verification. Sometimes it was stated, but less than 1% of our loans was actually those types of loans that you hear about in the media that caused the collapse of 2008. And in fact, I remember, I wouldn't call it a scalding, but the CEO coming in and saying, we're leaving a lot on the table because I'm looking at all the paper and we're doing all this full income verification paper, but we have all these other programs out here that stated or no income, no job. We called them ninja loans, no income, no job, no assets. We have all that we could still do, but we're not doing them. And the reason we didn't is, loan officers take the path of least resistance, and they're going after programs that have the lowest interest rate. So if you could prove income, then you got a lower rate than those that didn't prove income. So that's by and large one of the reasons why it was that way. But it was September of 2007. We just kind of saw the writing on the wall that, oh my goodness, how are we going to turn this corner? And came up with a plan that we're going to switch from all this subprime stuff because we couldn't sell the paper anywhere. It completely dried up. Heck, even the company I worked for owned a wholesale company. We couldn't even offload our retail paper to our own wholesale company. There's just no marketplace for it. Mm-hmm. So we decided to try to flip the switch and do nothing but government loans, FHA, VA, USDA, Fannie, and Freddie. And that, when you take thousands of loan officers nationwide, and we had probably 20 some odd branches across the country and thousands of loan officers. And, I remember if I talked to somebody on a Monday, say it's at the end of the month, and I talked to them on the Monday at the end of the month, I could get them closed by Friday. And now we're having to switch it to, okay, you talk to somebody at the beginning of this month, you may not get paid until 45, 60 days later. It was just too much of a mind trip for our loan officers to comprehend. And we weren't getting the job done. And actually, it was on my birthday in 2007, December 2007, the company filed bankruptcy, let everybody go, no severance, nothing, just said, hey, wish you the best. And I'm originally from Nashville, Tennessee. And at the time, I'm living in Charlotte, North Carolina. And I was like, you know what, this is a great opportunity to move back home because, one, I need some shelter because now that the company went bankrupt, between me and my wife, we were killing it. All the way from our early 20s to this point, it was mid 6 figures. And, when you're 22, 23, 24 years old and collectively you're making mid 6 figures, I don't know about everybody else, but I can tell you for me, not a good steward of money. So we bought big houses, fancy cars, Lexus, Denali, Escalade. So I had a Denali and an Escalade at the same time. It's like you can only drive one vehicle, but for some reason I bought 2. I had a custom motorcycle, a chopper. I had bought that. I had bought a 4-wheeler. So just not a good steward of my money. I had lots of them coming in and just assumed, hey, I'm going to continue to rise through the ranks. And now I'm making mid 6 figures collectively. I wasn't myself. I was probably 270 to 300 personally, and then joined with my wife's income because she was a top loan officer with the company as well. we're making close to
You both
500,000.
lost your job at the same time?
What's that?
Did you guys both lose a job at the same time to the same
Oh
company?
yeah, same
Oh,
company. Everybody got laid off.
so when did you
now
make a millionaire though? Like, when did that happen? When did you say, "Hey, this is a new thing I can do"?
So it was about a year later, after I moved to Nashville, the company had called and said, "Hey, we're going to resurrect and we're going to get the team back together under a new umbrella. We're going to do government loans and we want to bring you back as director of operations and we want you to open up our Nashville operations." I said, "Cool," because I'm kind of wasting away in a dead end job. I'm laying tile for a buddy of mine that owned a tile company. I'm also went on board with a broker shop that was also floundering too. And I was just like, wow, I can't believe I go from here to here. And it was broke. I mean, broker than broke. We had to move in with my parents. My parents had a recently renovated vacant house on the farm. So we moved into that 1,000 square foot house, could not afford internet, didn't have TV. And, a lot of people look at that like, man, those must have been some depressing times. And it wasn't. And this is why, as an entrepreneur, I'm so willing to take the risks that I take today, because I'm not deathly afraid of poverty. Been there, and it didn't steal my joy. And in fact, it was some of the greatest learning moments of my life and growth moments, because we didn't have internet, we didn't have TV, didn't peruse or browse on my phone. Yes, I had an iPhone, but you're still not really surfing on it because you had data limits and all that on it. So, I got books. So I read books on financial literacy because I went broke. I'm like, okay, how do you make all this money? And now you fast forward, you have nothing to show for it. If I'm going to get back on top of that mountain, I need to become a better steward of my finances. So I started diving into all kinds of books. And in fact, I even taught Financial Peace University at my church in Franklin, which is a bit of an oxymoron compared to the way that we teach things now. But anyways, it also grew the relationship with my wife too, because instead of being distracted and talking about business, now we're playing board games. We're doing things to entertain ourselves and going on walks and hiking and stuff, things that didn't cost any money. So our relationship grew. So again, I'm just not deathly afraid of poverty like most people are, because I've been there. And, to be poor in America is a whole different story than being poor in Guatemala or somewhere else, right? I mean, you're not really poor. You still got shelter. You still got food to eat. You still got transportation. You may not have the luxuries of life. So they called and said, yeah, we'd like to get the band back together again. I said, absolutely, because I'm broker than broke. And the owner, so where they got their money was from a hedge fund out of Connecticut. They pledged $25 million of operating capital for us to resurrect. And the owner of the hedge fund, his parents lived in Nashville. So from time to time, he would come into Nashville to visit his parents and knew that he had a branch there that he could pop into and, really check up on his money, but sometimes mentor me as well. And it was one visit where I had hit him with it and I said, listen, John, you're worth at the time $600 million, and birds of a feather flock together. So I need to know what you know. And if I could get in your sphere of influence, I'd love to do mortgages for them, because if they're doing mortgages, they're doing big mortgages. Big mortgages are big paychecks, a lot of profits, and you get your money back faster. And he said, that's all well and good. He said, be honest with you, Michael, we just don't do mortgages. I was like, it's kind of what I thought. You pay cash for everything. He goes, no. He said, understand what my business model is. It's a hedge fund. We are the kings of making money off of other people's money. So we still leverage other people's money. He said, we just don't use a mortgage the way that you think we would. And I was like, okay. And I was like, what do you use? He says, simple interest lines of credit. He's like, a good example would be a home equity line of credit. You could use business lines of credit, commercial lines of credit, but any kind of simple interest open-end line of credit, that's what we use to finance real estate. And I was like, that doesn't make sense. I said, because a HELOC is a credit card on your home. And all I'm doing is regurgitating the way I was indoctrinated when in my upbringing in the mortgage world. So everything was scripted out. We had some of the best sales training. I still know the 7 steps of the first call, the 6 steps of the second call, the 5 steps of overcoming an objection. I know what the 5 benefits are: payment, cash, tax, term, deferral. I mean, I can recite it all just because it was ingrained in me like a boot camp. But one of the things that we would also tell our customers is, oh, you've got a HELOC on your home. We need to refinance, get some cash out to pay off that HELOC, because that's like having a credit card associated to your home. And credit cards are bad. So I
Here we
was
go.
I was the complete opposite back then than I am now, because it's almost like being in the Matrix. You got two pills. You got the red pill and the blue pill. And I don't remember what color it was that you take to kind of opens your eyes up, but that's essentially what happened to me in 2009, because he hit me with this. He said, to be honest with you, Michael, mortgages are financial crack to middle America. The poor can't afford them and the rich don't use them. Understood the poor comment, because I wasn't getting people qualified that were poor and couldn't have the ability to repay. They couldn't prove their ability to repay from an underwriting standpoint. So I understood the poor part. I was like, the rich don't use them. I was like, and so I started investigating this whole HELOC thing. And I hired a CPA, an actuary, and a buddy of mine who's now a partner in the business today. His name's Matt Workman, and just said, this is what the rabbit hole I'm going down. And it's totally against the grain, because this guy just basically called me a dope dealer, right? He's like, you're a financial crack dope dealer. That's what you're doing. But it's profitable. It makes us all a lot of money. And yeah, I'm sure you're helping some people out along the way. And I thought I was, if you get somebody a loan, even back in the subprime days, we had what was called a net tangible benefit test. So you had to be reducing their payments, reducing the term, giving them some cash. There had to be some kind of financial benefit for them to get that loan. So somewhat responsible there. But if you know how it really works, you're like, yes, I might be improving your situation a little bit compared to where it was, but compared to where it can be, it's a game changer. So he told me I was a dope dealer, and me and a small team went to work on it to investigate it. And it took about a year, maybe a year and a half. And I was just like, I can't poke any holes in this. This makes financial sense. This makes mathematical sense. It's completely logical. And so I convinced my wife. So after we were broke, we finally got back on our feet, and now we can buy a house again. So we buy a house, and I wait 6 months after we bought the house, because that's how much seasoning was required at the time, or at least what I thought at the time is you needed 6 months seasoning before you could refinance your home. And so I contacted all these banks and said, here's what I want to do. I want to take my home that I only have 10% equity in, and I want to refinance the entire mortgage into a home equity line of credit. And I can't tell you how many. It was at least 10 banks. And every time I contacted a bank, I'm talking to a banker, then I'm talking to the branch manager, then I've got to talk to an executive at that bank before somebody can understand what I'm talking about. And finally, I got this one credit union on board. They're like, oh, okay. Because everybody hit me with the same thing. It's like, when you think of a home equity line of credit, you think of a loan just on that equity portion of your home. Nobody thinks of it in first lien position, something that can just completely refinance your existing mortgage. Right. I give an example. Let's say people have an FHA loan that they closed on that has mortgage insurance, but now they've got 20% equity. You refinance that mortgage to a conventional loan to drop the mortgage insurance. It's not based on the 20% equity you had. They just literally substitute your existing mortgage with a new one, hence the name Replace Your Mortgage. So I finally found a credit union that would do this and convinced my wife, here's what we're going to do. Now, I know this sounds totally against mainstream. It's totally against what Dave Ramsey talks about, but here's what we're going to do. We're going to refinance our mortgage with this credit union and make it a line of credit. And then this bank account that we keep putting our money into, our savings accounts and all that, we're going to abandon that. We're going to keep them open. We're not going to close them. But we're going to stop donating our money to the bank at 0.24% for them to just lend it back to us at 5-6% at the time. And I said, instead, we're going to dump everything into this home equity line of credit, and we're going to operate out of this home equity line of credit. Now, I will also be blunt and transparent that after I got back on my feet, making more than the average American, obviously, I was director of operations for a decent sized lender, good salary, good overrides and bonuses. So not killing it, not setting the world on fire. Probably in the neighborhood of 185 to 210, depending on the year. So I was cash flow positive. I say that because not everybody can execute on this. You have to take the first step in personal finance and understand what your budget is and not have more going out than what's coming in. In fact, you need to have a margin of what's coming in versus what's going out. If that's the case, then this works beautifully. If that's not the case, then you should not entertain this. But that was the case for us. We were cash flow positive. I lived on a budget and have been ever since because I went broke. I'm like, I'm not going to do the whole cars and fancy homes and all that stuff again. I'm going to keep our burn rate low compared to our income. Long story short, it took 3.5 years to pay off that house. So In 2014, I was being interviewed, early 2014, I was being interviewed by I think it's Mortgage Success. It was some kind of magazine. It was like a radio interview that they would post on their website. And they were interviewing me because I was the senior vice president for a federal bank and I was growing branches around the country. And so they wanted to know the secret sauce to recruiting and growing branches and being successful in the mortgage business. And, 45 minutes of that, very mundane. Nobody would want to listen to it. I mean, it's terrible. It's mind-numbing information unless you're actually in the industry. However, they hit me with one question. In the mortgage industry, there's probably nothing new under the sun. But is there something out there that people don't know about and probably they should? And again, I'm still making a living doling out mortgages. So I'm like, this is not going to serve me by spilling the beans on what I do personally. But I was like, you know what? Fine. You got me in the moment and you've got my back. You got me against the wall and now I've got to say something. So I was like, well, I don't technically use mortgages in my personal finance. Like, what are you talking about? It's like, no, almost 3 years ago, I've refinanced my entire mortgage to a home equity line of credit. And at the time of this interview, like we're within months of having the whole thing paid off. Like, really? How does that work? And so I go into it for 15 minutes. So they call me after the fact and said, listen, we're going to be honest with you. The first 45 minutes absolutely sucked. It was mind numbing. You didn't have any passion. I was like, yeah, I get it. They're like, but the last 15 minutes, never heard of that before. Most people don't know about it, even to this day, which astonishes me because we've been at this for 10 years. I can't believe how many people don't know about this. But we noticed your energy level was entirely different and you're passionate about it. Have you ever thought about turning that into a business? I was like, no, not really. I was telling friends and families this, but I never thought about turning it into a business, a consulting business, and teaching people how to do this. And so I hired a mentor and we went down to Boca Raton for a week. And honestly spent money that we didn't have. I wasn't at the time a huge fan of credit cards. Now I wouldn't say I'm a huge fan of credit cards, but I see how they can be properly utilized for a financial gain. So we put his fee on a credit card and spent a week. And what was cool about him was he said, once you're here, we're not only going to build everything out, but we're going to make money while you're here. And that was the God's honest truth. Actually, as we built it out, I picked up 3 clients that more than paid for his fee while I was down there. And I was like, this is awesome. I love talking to people about this. I love the light bulb that goes off when I talk to people about this. And he's like, yeah, you need to start a business doing this. And I did. And the rest is history.
So
now here we are.
Let's get into the tactics just for the final few minutes of our show. So
Yep.
from a high level, the idea here is, let's say you bring in $10,000 a month in income. We'll use that number because it's easier. Instead of depositing that $10,000 into your checking account that isn't paying you any interest, what you're doing is you're depositing it in, you're essentially paying down your HELOC. So you get your HELOC in first position, you pay your HELOC down 10 grand. And because the interest is based on average daily rate and it's not annualized, then you're paying interest on $10,000 less on that balance. And let's say you only need to spend, as you said, that gap, you're only spending $8,000. Well, now your interest, your HELOC is $2,000 less than it was the month before. And if you keep doing that, it compounds super fast. And that's how you can get paid off within 5 to 7 years. Is that right?
To a certain degree, it's a little bit more complex than that. And I don't want to make it overly complicated, but it's actually more advantageous than that. So another thing a HELOC does that a mortgage doesn't is it recasts automatically every single day for free. Now, in the mortgage world, some lenders will allow you to recast your loan. What recasting means is, let's say you got a $300,000 mortgage and you had a piece of real estate you sold for a $100,000 profit, and you're like, you know what, I want to chunk it onto my mortgage, but what I want to do is recast, not necessarily refinance. I want to recast the amortization on the existing terms back to 30, which lowers the payment, right? So recasting is highly protected by the mortgage lenders. Some allow it, not many, but when they do allow it, they only, like for instance, Wells Fargo will allow it, but they only allow you to do it twice over the lifetime of business with them. And when you do it, it's going to, do you see the balloons?
Yeah, you've got your your camera turned on to where you do when you do certain finger gestures.
Oh, really? I don't even know how to do that. Happy
I don't know.
birthday, everyone. Anyways, so they protect it, and it will cost you hundreds of dollars to recast. However, a HELOC will do that every single day automatically for free. So what that means mathematically is you start with a $100,000 balance and you put 10 grand in. Tomorrow, the bank is assuming or charging you interest based on the 90,000, not the 100,000. It's not an amortization schedule. A mortgage is an amortization schedule where, let's say you do a 360 month amortization schedule on a mortgage. Month 242, it's already spoken for of how much of your payment is going to go towards principal and how much is going to go towards interest. The downside on a mortgage is, one, it's very front-loaded with interest. All mortgages are, even 15, 10-year terms. They're still front-loaded with interest. That's where you're paying the bulk of your interest. Most everybody knows that. On a 30-year mortgage, it takes 18 years before your payment is actually affecting more principal than it is interest, right? So all 10 grand of your deposit into a HELOC went to principal first, then your interest is calculated. On a mortgage, when you put money in, money goes towards interest first, then principal is calculated. So we're flipping the script, right?
That is interesting.
Keep doing this. I'm going to get some balloons. But anyways, so yes, it's every single day. And you can gamify this and get more strategic too, where it's like, okay, if I know that money going in suppresses the balance, thus suppresses the interest and the time that it takes to pay this off, well, then I also know the inverse is true. When I take money out to pay bills, then my balance is going back up and I'm going to pay more interest. So there's ways to get very strategic about this of making sure that your money goes in as quickly as possible and comes out as slow as possible. And it's called offset accounting, and it'll actually speed up the process another 10 to 15%.
So at replaceyouruniversity.com, you have opportunities for people to hop in there, sign up for courses, watch videos, et cetera. What is kind of the primary way that people can reach out to you to say, I want to do this. I've never heard of this before. I want to learn how to do it. What's step one? What's the best way for them to do that?
Yeah, go to the site, replaceyouruniversity.com, or just straight to replaceyourmortgage.com. If you go to Replace University, it's going to show you a carousel of all of our 5 subsidiaries. But what we're talking about today is Replace Your Mortgage. Just go straight to the website. We have tons of free information. So you can sign up for a free account, and we're going to have hours upon hours of free education for you to watch so that you understand this. And then once you understand it, you're like, I want to see if this is a good fit for me. Then there will be a button there to book a discovery call with one of our account executives, and where we will analyze if this is a good fit for you. Because I've got a partner in the banking industry that he's got a really good saying that's not politically correct, but anyways, it really makes the light bulb go off for a lot of people. It's like, this is like yoga pants. Everybody can wear it, but not everybody should. And there are 70% of the people that we talk to that we don't recommend this at this time because, unfortunately, most Americans are living paycheck to paycheck. They're not saving a single penny. But for the other 30% that I wouldn't consider it mastering their budget, but they make more money than they spend, then we analyze, here's what it's going to look like in your situation. And the math is the math. You can dispute, hey, Dave Ramsey said this, or somebody else said this, and I shouldn't do this. Just investigate the math. It is what it is. And it's not hard math. We're talking 3rd grade level math here. And the thing is you look at how we've been indoctrinated for a long time. And I'm not talking about 10, 20 years. I'm talking centuries that we've been indoctrinated of how to look at things that are being offered to us as consumers. True story. I went to business school. It was McCall School of Business, which was named after Hugh McCall. Hugh McCall was the founder of Bank of America. And now on this side of school, looking back, all they were teaching me was ways to sell products that Bank of America wanted their consumers to consume, right? And What's most profitable is mortgages. So we have been focused. Look at all the marketing. Look at all the advertising. Look at all the promotional stuff that banks and lenders do. What is the thing that we always gravitate towards? Out of all of it, the interest rate.
Yep.
Because it's the lowest number. So we go after what we think the lowest number is. But nobody's dove into that and really looked at. Now you have what's called a loan estimate. And on the 3rd page of the loan estimate, there's this number on there. It's called TIP, total interest percentage. Now, prior to this regulation coming out and kind of transforming the mortgage industry, I used to call it rate of interest. So if I were to ask you, Jason, what is your rate of interest? You would spit out 3.5%. Well, no, that's your interest rate. Your interest rate dictates your payment. Time and balance dictates how much interest you're actually going to pay. So what is the rate of interest that you're paying? And nobody can answer that. But it's being disclosed to us on the loan estimate. And on the last page of the loan estimate, at the top, it says total interest percentage. But say you got a 4% mortgage, it's going to say you're paying 62.5% tip total interest percentage. That's how much it's costing you to finance that house. Now, if we were to buy a car and say, hey, this car is 30 grand, but you're going to pay 50 for it. That's the value of the car, 30 grand. That's the sticker on it. But if you're not paying cash, then we're going to finance it for you, and it's going to be 50 grand. How many of us would be like, oh, heck yeah, sign me up for that? No, not if we think about it that way. But unfortunately, we don't think of it that way. We say, oh, it's 30 grand. At what interest rate? What's the payment? Okay, it's $700 a month. Okay, that fits inside of my budget. And we buy it. We have to think differently and start looking at how we finance things differently. So this isn't just real estate. This is car financing can be done the same way. College can be done the same way. Everything that we finance can be done entirely different, not just real estate. And we need to start looking through it through the eyes that Australians do, South Africans do, Europeans do. When they look at a house that says, oh, it's $450,000 sticker price, but if I finance it on a 30-year term, it's going to cost me close to $900,000. Is that home worth $900,000? No, not buying it. In America, we do, because we look at it and say, $2,500 payment? Cool. Yeah, it fits inside my budget. Let's do that. So we have to start thinking like they do. We also have to start thinking like banks do. So if we start thinking like a bank, then we start earning like banks do.
This is fascinating to me. I know you've helped me. You directed me to a couple of your guys that can do these, and I made a couple of calls to those folks. And so I'm actually looking at buying a house, and I want to use this HELOC as a first lien position. So I am one of your fans, and I would be trying to do this on my own. Michael, I want to thank you for being on the show today. I want to tell everybody, make sure you go to replaceyourmortgage.com to learn more about this. And Michael, I don't want to obligate you to this, but I really would love for you to come talk to my mastermind, the Exeter Club, and do some just small group coaching on this, because I think all of us would want to do that. So maybe we can talk about that after the show, about you coming to do this, and that'll be a teaser for anybody. If you want to know more about this, you can look at the Exeter Club as a way to learn how to do this. But you can always go directly to the horse's mouth, as they say, to replaceyourmortgage.com. Also, go follow him on Instagram at _real RYU, _real RYU, and RYU stands for Replace Your University. And then you can also find him at Replace Your University on Facebook. Michael, I'm going to give you the last word today, and I want to ask you this question. What is your number one piece of advice for entrepreneurs?
Don't give up. That's the thing about entrepreneurs, or would-be entrepreneurs, is, some people are wired this way. Some people, I don't necessarily, I guess I could be honest and say I am wired this way because, athlete, competitive and whatnot. It was tough for me to give up, or have something get the better of me, or have somebody get the better of me. I've just always been competitive. But that's the thing about entrepreneurship. It's not this straight line for most people. 99% of businesses, you don't go from 0 to 100 million in a straight line. It rarely happens that way. What typically happens is you go from 0 to 10 grand to negative 5 grand. Oh, now you're at 50. Now you go negative 100. That's what it looks like as an entrepreneur. And after the first, maybe even the second obstacle, most people fold like a lawn chair. They just don't have that perseverance and mindset that, hey, this is not failure. This is feedback. The marketplace is telling me something. I need to course correct. What could I be doing differently? And it's scary. My wife, she won't get on a roller coaster just because it's scary, right? Most people won't take that leap of faith because it is scary. But that's where I find the most growth, and that's where I find ultimate freedom, is through entrepreneurship. And that's also where I find excitement. Those down years, those months where it's like, the other thing about entrepreneurship, there's been times where as a company and executive team, it's like, all right, let's start looking at yachts. I got a buddy that he's buying his second jet. His first one's a G450, but he's got to wait 18 months for it to get built. So he's like, I still need one. So I'm going to buy a Challenger 350 now too. So just to get him by to his next jet. There are months like that where you're like, all right, let's start looking at some boats and some planes. And there are other months where you're like, what all can we liquidate? And most people can't live that way. And you just got to be wired a little bit differently to find that exciting. That's where you grow, is when you hit those down months. That's what tests your limits. That's what tests your capacity. And now it's time to go to a different gear. That's where you find growth. It's not in the great months. So that's the issue with entrepreneurship. It all starts up here with mindset, and most people go into it with the wrong mindset.
Well, Michael, thank you for that advice. Thank you for being on the show today, and I look forward to talking to you again real soon.
Thanks, Jason.
All right, well, there you have it. A wonderful story about a man's perseverance through a lot of ups and downs. And I hope that you go back and really listen to what Michael said about this journey of entrepreneurship, this up and down, up and down. I say this a lot, that an entrepreneur has this invisible horizontal line in their life. And the closer you get to that line, the closer you are bankrupt, out of business, done. But you as the entrepreneur are the only one who knows at any time how close you are to that line. It doesn't always feel good to be an entrepreneur. So what he started with in our show was, I asked him, what is the one key to success? He says, don't take no for an answer. Setbacks are opportunities. It's feedback. It's not failure. And then he ended the show with his advice, which is, hey, how do we as entrepreneurs survive? Well, we survive by not giving up. So if you're in that struggle right now, if you're in a struggle, you don't know if you're going to be able to make payroll. You don't know what's going to happen next. You don't know if bankruptcy is actually looming on the horizon. Don't give up. This is the life of the entrepreneur. And no matter how bad it is, you're probably not going to die as a result of whatever's causing the problem. And if that's true, then man, you could survive this. It's going to go on. So a big thanks to Michael for coming on the show. Go follow him at _real RYU on Instagram. Go look up replaceyourmortgage.com. And as an entrepreneur, if you are a male entrepreneur, business owner, and you are interested in looking at a mastermind that can help you level up your experience and get you out of the weeds of daily operations so that you can focus on what's most important in life, I want to invite you to take a look at the Exeter Club. We've made some huge changes for the Exeter Club for 2024, and I think it's right up your alley. If you're a male entrepreneur owning a business doing somewhere between 2 and 5 million on the low end, up to 10 or 50 million, that's who we serve in our club. And we do amazing content, amazing coaching, amazing trips and adventures, and exciting things that you're going to learn lots of content about how to get yourself out of the weeds and continue to build a company that can provide your family a legacy. So if you're interested, go to theexeterclub.com. If you're watching this on YouTube, I've got my sweatshirt on today. It says the Exeter Club, theexeterclub.com, and Exeter is EXITER, theexeterclub.com. Check it out. Apply for membership. Let us talk to you, and maybe we'll have Michael come on to do a private little teaching on the Exeter Club on this idea of how to pay off your mortgage in 5 to 7 years. Once again, big thanks to Michael Lush for being my guest on the show today. Please tune in again next time when I talk with yet another very successful entrepreneur about his or her journey to success. Until then, remember, I am the real Jason Duncan, and as always, Jesus is King.
Attention business owners. Attention business owners. Feeling burnout from running your business? Uncertain if you're nearing burnout? Take our free 10-question business burnout test at businessburnouttest.com to discover where you stand. With just 10 quick questions, you'll learn how to immediately begin making changes to regain freedom and success. Cut your daily operations time in half. Improve your quality of life and prepare your business for your future exit without losing revenue or profit. Visit businessburnouttest.com now and take the test. Thank you for listening to another edition of The Root of All Success with the real Jason Duncan. If you've enjoyed this week's episode, visit therootofallsuccess.com to access the show notes and other helpful resources. Follow Jason on social media at The Real Jason Duncan. See you again next time here on The Root of All Success.